record. What we're going to do is finish going over 18, and I asked you to do 14 for today, correct?
Yeah, that's correct.
Okay. And then we're going to be pushing and squeezing because you have your test on Friday, and I want to get as much practice in as possible. So we'll talk about that when we get done with these. So I'm going to share screen. Okay, so this is what we did the other day. And this was as far as we got the other day. And so we did all of the doodles, did all the analysis of the accounts. And now we're taking those numbers and taking them here. Again, remember when you're doing this, you're not worrying about cash flow. When you go look at what the changes are in the accounts, then we worry about how they affected cash flow. So net income, we had to find in retained earnings because it wasn't given to us. And so we had to work backwards. In the dividend account, they told us this time what was paid. You have to remember in the dividend account, paid reduces, declared increases, because sometimes they'll tell you what's declared. In fact, in number 14, they told you what was declared. Beginning balance, ending balance come off the balance sheet. And so this was the information we had. The dividends paid for 30,000, which would decrease the account. And so what we did, subtotaled. To get to the ending positive balance, you add those two numbers together. It's just a math thing. So our declared was 35. Declared increases dividends payable, decreases retained earnings. And so we took it to retained earnings, got our subtotal, so that our plug number was our net income. And so that's how we got this. Depreciation expense, we had to go up to these here. First of all, we had a piece of equipment that was sold. They told us the cost. They told us the book value. We had to work backwards to get the accumulated depreciation. So you have to remember cost minus accumulated depreciation equals book value. It was sold for 5,000, so it gave us a gain. This right here affects the account. And so since we sold it, we got to take it off the books. Cost was here. Accumulated depreciation was here. And so again, it's a subtotal, both places. So to get from here to here, it means we went out and we purchased. To get from here to here, you have to remember the increase in accumulated depreciation is depreciation expense. And so that's how we got here. We had no amortization. You don't need to put it on there if you don't have any. Just put it on there. Just keep it in the right order here. And then we had to do our gains and losses. So we had a gain here. If it's already added in here, we need to subtract it off because they have nothing to do with operations. We had a gain of marketable securities. So down here, we had to do the marketable securities. They told us that we sold them for 5,000. And so that was, we purchased 5,000. And then we ended up selling the same 5,000. But when we sold it for a gain. And so that's our $2,000 gain there. Our loss on investments came from here. And that was added. These were just the changes in the accounts. Decreases in current assets are increases in cash. Decrease in a current liability is a decrease in cash. Assets, opposite. Liabilities, the same. Questions on operating activities? I know we kind of rushed through this next section, so I'm going to go back through it again. So this is where we're going to record our purchases and sales. So we'll take one item at a time. Cash paid, cash received. That's what you got to remember for this section. So cash received will include gains and losses. So in our investments, we have two things. We have one that we sold, and we have one that we purchased. And so we sold it for $5,000. That goes here. And then from our account here, we purchased $5,000. Purchase will decrease cash flow. Sale will increase cash flow. So if you look at the sale here of 5,000, see what you have up here, another 5,000. Those two added together equal your cost. We had our van, sold it again, cash received was 5,000. Sale of the van, we have a -2 up here. The two of them together equal 3,000, which is our book value. Looking at our equipment account, we took care of these. Now we have a purchase. The purchase will decrease cash flow. Marketable securities. We had a sale, told us we sold it for 7. That's our 7, cash received. Got a gain here, subtraction, gives us our $5,000 cost. Purchase, again, was the 5,000. Purchase is a decrease, sale is an increase. Questions? Okay, so we've taken care of all of those. Taking care of those, taking care of that. So we just really have this stuff here and whatever else is on the balance sheet that we need to take care of. And so let's deal with the stuff that we have first. And so we have our notes. Well, what do I have down here first? I had dividends, I think. Okay, so dividends paid. How much were the dividends paid? So we're going over here. So remember, we got to look at every change. So declared is added here, subtracted here. So that balances each other out. That doesn't need to go on the cash flow. But we have a paid here. That does need to. So we're going to do paid. Now, this might seem silly to you, but you would be amazed at the number of times this happens. If this says paid, make sure you're subtracting. You may think that's silly, but I say you would not believe the number of times. Okay. So that takes care of dividends. And then we have to go to our note. And remember that what this said. It said all current liabilities are paid in a timely manner. So that means this 10,000 was paid. Okay. This 10,000 added here, subtracted here. So they net each other out as far as cash flow goes. You don't have to put it in because it's just a transfer. It's a journal entry. It doesn't affect cash. But this did right here. So we borrowed 29,000. So we're going to add that in over there. All right. Questions on the notes and the dividends before we finish this? All right, if you look at your balance sheet, the common stock account did not change. Don't presume when accounts don't change that nothing happens. One of my favorite cash flows in here is that most of the changes are 0. So I'm just going to put this in as a 0, just so that it stays in there if you're using this kind of as a template. And then let's go look at treasury stock. So treasury stock increased by $10,000. So if treasury stock increases, it means they purchased treasury stock. And again, that's going to be a, reduction in cash flow because they paid for it. And if you look, we have analyzed every single account. Remember, the cash account and retained earnings never, ever, ever go on here. Okay, so then we're going to add our 3 sections together. And hope we come out. Okay, and so then you go to your balance sheet. The beginning cash was 15. And if we add those two together, oh, that doesn't work. That's why. So this 3,000, that was the answer we were supposed to get because that was the change from the beginning cash to the ending cash. This is what you put on to make sure that it actually worked. All right. What do you think? We don't have a non-cash transaction, so I'm just going to take that out. Remember what I said. If you don't ask questions, I presume you know everything that I just did. So there's no questions. Okay, then let's go on to number 14. So 14 is a little bit different in that they give us an actual income statement. So some of the stuff we don't have to figure out because they gave it to us. Okay, so if we go look on, and make sure you look what's on the income statement. So if we go, we see that there are amounts for depreciation. We know we need that. There's also a gain on sale of investments. Are we going to need that?
Yeah, we will.
Okay. And then, of course, we need the net income. So our additional information is on the next page. So let's start with that. I already have my beginning balance because the presumption is you guys have already tried to do this, so you should have most of this written down. So the beginning balance for dividends payable was 30,000. They told us that dividends declared were 50,000. How does dividends declared affect dividends payable? Increase or decrease?
It's an addition, I believe. No.
Right. Because
Yeah.
dividends declared says, okay, now the company has more obligation to pay dividends. So that increases the dividends payable. Okay, declared will increase. So if I have an ending balance of 50, what does that mean that I actually paid? How do I think? 80 to 50.
30,000.
Okay, so we're going to subtract off 30,000. Dividends declared increases dividends payable, but it will decrease retained earnings. Okay. And so in this case, I don't really have to do this part, but I should just do it anyway. So what would I put in there to make it equal 550, to go from 260 to 550? What goes in there?
190.
290, somebody say?
Yeah, 290.
And did we know that anyway?
Yeah.
Because it was on the income statement, right? Okay, so sometimes they give you a little bit more information, sometimes they don't. We've seen that. Okay, so it says no investments were purchased. But there was also some information on the income statement about the investment. So if it says nothing was purchased, I have a beginning balance of 100 and an ending balance of 60. What does that mean if nothing was purchased? The 40,000 is what? How do I
Cost of
go
goods
from
sold.
100 to 60?
Cost
What
of
do I
goods sold.
put it? Go ahead, Sean. Sorry, I keep cutting you off.
Cost of goods sold.
So the cost of what I sold, right? So we're gonna do a minus 40. Okay, that gives me my ending balance because it says I didn't buy anything. But I need my cash received. So the cost is 40. Do I know anything about a gain or a loss? Guys are gonna be really in trouble for this test. What do I know about it? What did it say on the income statement? Go look at it.
I have the online textbook. I'm trying to bring it up right now, but it was twitching out before. Sorry.
It's okay. There's got to be somebody with a textbook in front of them. What does it say on the income statement?
Um, 6 million in sales or cost of sales.
Look for gains and losses.
Gains on sales 300,000.
Okay, and it was a gain on sale of
Investments.
the investment. So that means I received how much? Well, what did I do with those numbers?
260.
No, these two here.
You add them together.
Yeah, Adam.
Add them, right, to get our cash received. Okay, so this one was a little different. They gave us all the information, told us that there was nothing else purchased, so there's nothing that's going to subtract this investment account. Told us what the gain was. We know the cost, we know the gain, so we can figure out our cash. They're never going to give it to you the same way, so you just got to be able to roll with what they give you. Okay,
Wait, I have a question.
yes, good, thank
The
you.
cost is in red. So is that a negative? Like, would you not subtract that because you're losing money when you're paying out for the cost?
I don't know
Is
why
it-
it's in red.
Oh, okay.
It
Okay.
wasn't supposed to be. It's whatever I copied it from.
Okay. So you just add the cost and the gain to get the sold.
Correct. Yeah. Because the gain is always on top of the cost.
Okay. Thank you.
Sure. The current portion of long-term debt was reclassified from non-current. Okay, so let's go down here to the notes. So it's telling me this ending balance came from the long term. So that means that this balance right here at the beginning of the year was what? What happened with that $100,000?
It went down.
What are we gonna do with it? It was current liabilities are paid. It's telling us that the ending balance came from here. So this beginning balance needs to go away. How does it go away? What do I do?
You subtract it, or you
Because
pay it up.
no, I pay it, so you need to subtract it, right? Okay. And so that ending balance came from over here. So we're gonna add it here. And we're gonna subtract it here. Okay, so it subtracted here, added here. So what does this mean right here? How do I go from 387 to 530, 387 to 437?
We borrowed more money. We borrowed 150,000, I believe. No, we borrowed 50,000.
Just 50,000.
Wait a minute, do I have the wrong numbers on here, Ron? Hold on, I need another zero. This is supposed to be 4 million. I guess I don't. Okay, so this is 3,870,000. Now go tell me how much. It's not 50,000, it's what?
500.
Yeah, 500. Okay. So they tell you that no equipment or buildings were sold. So the equipment, that nothing was sold. So then the difference between here and here is going to be something that I went out and did what? If nothing was sold, that whole 10,000 is going to be what?
Something you purchased.
Something we purchased. Okay, and so if nothing was sold, there was no change to our accumulated depreciation. It's 100,000, right? I need to put the comma forwarding on it. Comma, it was 100,000 was your purchase. So if nothing's sold, it's not going to affect the depreciation at all. So what is our depreciation expense?
It would be the 400,000.
Right. And we knew that anyway, because if you go look on the income statement, it told us that. Okay. So now we're gonna go look at our building. In the building account, we started at 5 million, we ended at 6 million. Again, nothing was sold, so what does that mean?
It was purchased.
There was another purchase, right? And so we got $1 million purchase, right? Okay, but there's a but with your purchase. That long-term debt was borrowed to partially finance the building purchase. So this building purchase of $1 million was partially financed by this down here. Half of it was financed. And this is what I was talking to you about at the very beginning there when we were talking about non-cash transactions. So the borrowed portion was used for half of the purchase. Is that going to affect my cash flow?
Yeah, it will.
Did I get this $500,000?
Sorry.
I didn't get it, right?
Yeah, no, you didn't get it.
Okay, so half of this purchase will affect cash flow. This is going to be one of those non-cash transactions. All right, so I will go over that in this when we get down there. So let's go with this. Net income is how much?
$100,000.
Look over here.
Oh, I'm sorry, 290,000.
290, right? Okay, my depreciation expense very nicely just filled in for me from over here, came from here. Okay, so we had a gain on investments, right? And we had a gain on investments of how much? Look at the information we have here.
300,000.
Okay, and we need to subtract it, right? Okay, we don't have any other gains or losses because we didn't sell anything else. So now go look at your balance sheet. Look at your current assets. Okay, they gave us no information about marketable securities, did they? Nope. So we don't have to do anything there. Accounts receivable, what did it do?
Accounts receivable went down by 5,000.
Okay. So if I have a decrease in accounts receivable of 5,000, is that gonna be plus or minus?
Since it was a decrease and it's a current asset, it'll be an increase on the cash flow statement.
Okay. All right, what about inventory?
Inventory went up by $5,000.
And so what does that do to cash flow?
It makes it go down by 5,000.
Okay. Let's go to our current liabilities. What happened in accounts payable?
Accounts payable went up by $10,000.
And so what does that do to cash flow?
It's an increase of $10,000.
All right, questions? Okay, let's go do investing activities. And so what do we have for investing activities? So we've got investments, we've got land, buildings, and equipment. What do we got?
We would have had a purchase of buildings, a purchase of equipments, and then a sale and a purchase of investments.
Okay. So let's do the investment first. We had sale of investment, and how much did we get?
340,000.
Okay, did we have any purchase of investment?
We had none.
Okay, so we'll get rid of that. All right. So now let's do equipment next. So what do we have here?
We have no sale of equipment, but a purchase of 100,000.
Okay. And so what does that do to cash flow?
That would be a decreased cash flow since it's a purchase.
All right. What else do we have? So then we had our building, right?
Mhm.
Okay, we have a purchase, right?
Yep.
So how much are we gonna put here?
For the purchase of the building, it would be 500,000.
Okay, because that was the cash paid, right?
Yes.
Okay, so that takes care of all that, right? Okay, then we have financing activities. So what were our dividends that were paid?
Dividends that were paid was 30,000.
Okay, did we make any payments on a note?
Yes, we did the 100,000.
Okay. All right, this was just a reclassification. This we already took care of, but we haven't taken care of that yet. What is that one gonna be? That's gonna
That
go down here. So all you're gonna do is put it down there. And all you do is just say what it is. So it was the purchase of a building with a mortgage. So now I know that I've got that included, but it didn't affect cash flow. No change in your stock account, right? No additional information there. So these should go away. And then we're gonna add those three together and see what happens. Okay, so if I look, what was I supposed to get? Which change in cash?
10,000.
So we got the right answer.
It's nice when that works out.
And no challenge though. Okay, there's number 14. Questions? Okay, I sure hope you all are paying attention because you're not asking questions. So I'm presuming that you all know exactly what I did and can do it.
I have a question. For the-
Good. Yes, ma'am.
Can you hear me?
Yeah, go ahead.
It froze on my side. But for the homework, do we have to we have to do the cash flow statement and do the 7 requirements or just the statement?
Just the statement.
Okay.
You will actually be answering those questions as you do the cash flow.
All right.
So the other thing that we're gonna do, because we still have some time, is so number 20. Which one do I have due tonight? Is it 20 that's due tonight?
Yes, it is.
All right, because I know that I changed things. So what we'll do is we'll start looking at the additional information. I'll help you with the additional information with this one. So 20 is due tonight. And I'd like to have you have the second one due tomorrow night so that Wednesday we could go over them. Are you okay with that? One due tonight, one due tomorrow night?
Yeah, I mean, the only question, and this is just a question for me, will I have to like return it in since you're changing the date? Because I've done both of them already. And I turned them
Didn't I
in.
already, oh, if I just change the date and
Then
you've
it-
already done them, you're fine.
Okay, sounds good.
Yeah, because I would just rather that and be able to go over them with you step by step on Wednesday. The other thing is there's a couple on Banco. No, number 18, I will show it today. I've had it hidden. 18, I work through step by step. And you'll have that in addition to what we did in class where we worked it through step by step. There are also some other questions that I also will open up today where I just give you some check figures with some other ones for you to practice. So this is going to be the deal. Then 19 is due tonight and 20 will be due tomorrow night. So what I will do first thing tomorrow morning, I'm just trying to think what my schedule is for tomorrow. Yes, I can. First thing tomorrow morning, I'll get 19 graded for you so that you know what errors you have. And then you can work on.
Sorry, isn't it 20 due tonight and 19 due tomorrow night?
Yeah, I think that's right.
Let me look, because I know I changed what I originally had. Oh, I know.
I was gonna say, if that's the case, then I think I have to switch some of my assignments around because otherwise they're in the wrong space.
Okay, my computer has frozen. Let's see. Let me try again. So, while I'm trying to figure this out, start working on.
Yeah, it says that the first assignment due tonight is problem 20, and then the next one is number 19.
Okay, so let's start working on 20 is due tonight, correct? And then, so let's start working on the additional information for 20. And then I will grade that one in the morning. And then the second assignment will be due tomorrow night. Like I say, I would rather have Wednesday to go over those with you. And so that will be due on the 9th. That's how I have them all set up anyway. That's the way it's set up anyway. So that's exactly what I did. All right. Okay, so let's look at number 20. I am going in right now and unhiding things while we're,
And just one point of clarification for the homework. Do you want to see the whole doodle section as well, or just the cash flow statement lines?
if you show me the doodles, if there's an error and you show me the doodles, I can figure out where it is.
Okay,
So I would prefer it all.
gotcha.
Okay, so number 12, number 13, and so 12 and 13 are on Vanco with the whole answers. And then I give you check figures for 10, 11, and we did 13 or 14. So there's other ones, and I'm just telling you right now, you got to practice this stuff. There's only way you're going to be able to do it. All right, let's go to 20 real quick. Let me get back to a share screen. Let me get back in my stuff. Set up a new sheet. And let's look at the additional information for 20. So we have investments first. Cost 10 were sold for 15. Okay, so their cost was 10. They were sold for 15. So what does that mean?
They got a gain for 5,000.
Okay. So let's go look at the investment account. And I had a beginning balance of 10. And an ending balance of 5. So how does the one that we sold, how does that affect the account? What do I have to do here based on what happened up here? How does the sale affect the account? How does this sale affect this account?
By 5,000.
What part has to come out? Here's your
Cost,
hint.
the 10,000.
Cost, the 10,000 has to come off, right? The cost. And so that means that we purchased what? To get the ending balance. How do you go from 0 to 5,000?
Add
Purchase
5,000.
5,000.
Put 5,000 in, which is what you purchased. Okay, dividends paid during the year. Were the next thing they gave us. So dividends paid were 10,000, so that gets subtracted out of here. So to go from a -5 to 10, it means that they declared how much?
$15.
Okay. All right. So then over here, retained earnings at a beginning balance of 40. Ending of 70. So if they declare dividends, what does that do to this account? What is declared dividends due to retained earnings?
Decreases it.
Okay. And so that means that our net income is going to be how much? How do you go from 25 to 70?
45,000.
Okay. Then we have a van that was sold. It cost 20, was sold for 5, and had a book value of 3. Well, how convenient is that? All right, so it's the exact same thing. Cost 20, sold for 5, had a book value of 3. So we gotta work backwards to get our depreciation. So it gives us a gain of 2. Go into the equipment account. And the depreciation. Okay, so we had if we sold it, we got to take the cost out of here. Depreciation out of here. So then how much did we purchase? If I get the right number in there, that probably would help. So what did we purchase? How much?
$100,000.
And what would our depreciation expense be to go from 3 to 50?
47.
Okay, and then the last one just has to do with the notes. And again, they tell you it's paid in a timely manner. So that means this 10,000 was paid. And this 10,000 comes from here. So then how much did we borrow? To end up with the 171. Questions? So that gives you a good start for the homework that's due tonight. I sure hope you guys know what you're doing. If you don't ask questions, I can't answer them. And it's a little frustrating on my part, but it's your choice. Said I'm here to answer questions and show you how to do stuff, but if you don't participate, can't really do it. So, all right, we're done. I'm gonna stop recording.